Hey everyone, welcome back to Wealthy Business, your go-to channel for finance, market trends, and economic insights. Today we're diving into one of the biggest financial concerns of 2025. Is the U.S. heading toward a recession? With President Donald Trump back in the White House, global markets are on edge. His aggressive tariff policies, economic strategies, and uncertain trade relationships have investors and economists questioning whether we're on the brink of a downturn. So, in this video, we'll break down what experts are saying about the likelihood of a recession, how Trump's tariffs are affecting markets, the Federal Reserve's response, what this means for businesses, investors, and everyday consumers. Make sure to stick around until the end for my take on how to protect your money during uncertain times. Let's get started. Are we facing a recession in 2025? Financial analysts and economists are closely watching the U.S. economy after Trump announced a series of aggressive tariffs on imports from China, Mexico, and Canada. These tariffs have created market volatility. The Dow, S&P 500, and NASDAQ have all seen major fluctuations. Inflation risks, higher import costs mean consumers could face rising prices on goods, trade uncertainty. The business community is waiting to see if Trump's trade policies lead to a full-blown trade war. Holger Schmieding, chief economist at Berenberg Bank, calls Trump an agent of chaos and confusion and believes his unpredictability could be hurting long-term U.S. growth. However, Schmieding doesn't think a recession is imminent. He points to strong consumer spending, a steady labor market, and lower energy prices as signs that the U.S. economy is still resilient, for now. But the real concern is what happens beyond 2026, if tariffs, inflation, and policy uncertainty continue to disrupt global trade. The impact of Trump's tariffs on markets. Over the past few weeks, Trump's trade policies have shaken global markets. After announcing new tariffs, stock markets dropped sharply, with investors fearing higher costs and weaker corporate earnings. U.S. stocks have faced significant sell-offs. Investors are bracing for slower growth. The Federal Reserve is unlikely to cut interest rates anytime soon. Could Trump's policies cause stagflation? One of the biggest fears right now is stagflation, a situation where the economy slows down, but inflation remains high. Several business leaders and economists worry that if Trump continues down this path, import costs will rise, leading to higher consumer prices. Investment and job growth could slow, causing weaker economic activity. The Federal Reserve may have to keep rates high, making it harder to borrow money. If inflation remains stubbornly high while growth slows, we could see stagflation, a nightmare scenario for both businesses and households. What is the Federal Reserve doing? The Federal Reserve, led by Chairman Jerome Powell, is being cautious. Right now, the Fed's interest rate is between 4.25% and 4.5%, and they aren't in a rush to cut rates due to inflation risks. Powell recently said the central bank will wait to see how Trump's aggressive trade policies impact the economy before making any big decisions. If inflation spikes due to tariffs on China, Mexico, and Canada, the Fed might be forced to keep rates high for longer. That means higher borrowing costs for businesses and consumers, slower economic growth due to expensive credit, and lower home sales as mortgage rates remain elevated. The bottom line, the Fed's decisions will have a huge impact on the stock market and the broader economy. Could the U.S. actually fall into a recession? Trump himself has not ruled out the possibility of a recession. When asked about concerns over an economic downturn, Trump called it a period of transition and assured Americans that his policies are aimed at long-term economic growth. But financial institutions like J.P. Morgan and Morgan Stanley are warning of another period of uncertainty, potential economic contraction in 2025, and a slowdown in hiring and capital investment. In fact, JP Morgan analysts have turned bearish on U.S. stocks and expect GDP growth to slow dramatically in the next few months. What should investors and businesses do? With so much uncertainty in the economy, how should investors and businesses react? For investors, diversify your portfolio. Don't put all your money in U.S. stocks. Consider safe haven assets like gold, bonds, and defensive stocks. Keep cash reserves in case of a market downturn. Look for opportunities in sectors that benefit from tariffs, such as domestic manufacturing. For businesses, monitor supply chains. Trade disruptions could impact production. Lock in fixed borrowing rates before interest rates rise again. Reduce unnecessary spending to prepare for slower growth. Expand into new markets to reduce reliance on tariffed imports. Now more than ever, staying informed and making smart financial decisions is key. Final thoughts. So is the United States heading for a recession? Short term? Probably not. Consumer spending and a strong labor market are keeping things afloat. Long term? The risk is definitely rising due to tariffs, inflation, and market uncertainty. What do you think? Will Trump's trade war push the United States into a recession, or will the economy power through? Drop your thoughts in the comments below. Don't forget to like, subscribe, and turn on notifications so you never miss an update from Wealthy Business.